All right, welcome back to Two Stupids Guys Trades Talk. I'm Vinny.
I'm Dylan. Vinny's got something special for us today. This is going to be the most important video that we do for a very long time. Everyone's worried about the stock market crashing and all that stuff. Anytime that happens, stocks usually overcorrect a little bit. So these are prices for very huge stocks, Apple, all that kind of stuff that you want to look for. That's your buy target for when this happens. Save this video, look at it as soon as whatever the crash happens. All right?
Yeah. All right. If you guys enjoy this kind of entertaining stock market content, please give us a like and subscribe below. We'd love having you guys here. With that, we'll get to it.
Two Stupid Guys Trade Stocks.
All right. So, kind of the methodology here basically is I want to use margin of safety pricing. If you've never heard of that, it's popularized by Phil Town Investing. Warren Buffett kind of follows margin of safety. Monash Babrai. A lot of really famous, preeminent value investors follow this margin of safety pricing. Basically, what it is you do the discounted cash flow analysis, and then you will go ahead and discount that back at a certain kind of rate, either 30 or 50%, depending on how much of kind of a buffer zone you want to have in case your math is off a little bit, okay? So these are my kind of assumptions going forward. I went for basically a 10% market rate of return. I used a future PE of 20. I know that's above the S&P 500 historical average, which is about 15. But most of these companies are household names that typically trade above market. They're major growth companies. So I discounted the growth and I gave them the benefit of the doubt with a little bit of higher PE, except for one. And then I used about a 10-year time horizon. That's typically what I look at when I'm looking for a value investing stock.
Right. So they're more safe stocks.
Yes.
Because usually when a market crash happens, the ones that were leading the bull charge, EV companies, are the ones that are going to fall the hardest. And you want to put your money in the safest ones. And that's going to be your Apple, all those ones.
There may be an EV company in this list today.
Ooh, really?
Yeah, I know, right? So Apple, my largest holding. God, I love this company. My biggest regret in life with Apple is not buying more of it sooner.
Yeah, fair enough.
But they're looking at for $368 billion in 2022 revenue. I based this on the consensus analyst revenue numbers from Yahoo Finance. Same thing with the EPS, $5.34. I used this number here from Schwab of their 12.5%. That's their 3-year historical EPS growth rate. And with that, this is what I determined for a price for Apple. This is the Phil Town Investing calculator. It's right on their website. It's kind of a great tool. But I put that 534 EPS, 12.5% growth rate. I give them a future PE of 20, 10% market rate of return. So this is what Phil Town uses right here. He calculates a current value of $134 per share for Apple stock, and he discounts that at 50% margin of safety, which is $67 a share. I know, right? It sounds pretty crazy. It's hard to find stocks that are going to meet the 50% rule, except for Baba. You can see our Baba analysis video.
Yeah.
But if you use a 30% margin of safety, which is something that's been a little bit more modern kind of usage. You look at Buffett is kind of used more of a 30% rule now these days. But you're looking at about a $93.80 a share price target on Apple.
So Apple hits 93.80, you're buying your whole house on it.
Exactly.
You're selling a second mortgage, you're going all in.
Yeah, exactly. That's the plan. So AbbVie, great pharmaceutical company here, maker of Skyrizi, the drug I personally have affinity for. But looking for $55 billion next year, $13.97 per share in EPS. A little slower growth. It's a pharmaceutical company, about 4.5%. They have kind of a product issue where their main product, Humira, is going to be coming off of patent next 2023.
They do Humira?
Yeah, Humira.
They have Humira?
Yeah.
I didn't know that they were Humira.
Yeah, Humira.
Oh, man.
Yeah.
Okay.
Yeah. Exactly. So they're looking for $13.97 EPS, 4.5% future growth rate, give them a future P of 20, which is a little aggressive for pharmaceutical industry. But if you're looking at this 30% discounted rate right here, it's $116 a share, which is actually about where they're trading right now. They're at about $118 a share. So this one, if these numbers are consistent with what you believe the company can do, based on analyst estimates and your own personal estimates, that's about what you'll be looking for.
So AbbVie is almost a buy right now.
Yes, that's why Buffett's been buying pharmaceutical companies for the last 6-9 months.
Nice. Another thing in a downtrend for a crash, what doesn't ever get hit is cosmetics, and they are the Botox people, and they have all the Allergan products. So Kind of important there.
Yeah, yeah. All right, Amazon, old Jeff Bezos here, man. This is a company, same thing. You wish you had bought this. 581 billion next year, $72 a share. 5-year EPS growth estimate, according to Yahoo Finance, 37.93%. Insane, right? For a company this large already. I couldn't go with that number. I haircut that back, like Jeff Bezos haircut style. So I cut that back to 19%. I halved it to be really conservative, right? But you're looking at 72.38 for EPS. It gave them a future PE of 20, that 19% growth rate we talked about, and 30% margin of safety price is about $2,200 a share, which I know is a pretty steep discount from where Amazon is right now, but it's not unreasonable to see an overcorrection like that. Like, what was Amazon last, March of 2020? Probably somewhere in that ballpark.
Can get it for you.
Yeah, it was under $3,000 a share a few months ago because I thought about buying some, and I didn't. Now it's at 3,600.
It actually hit 1630.
Yeah, there you go.
During COVID.
All right, Google, Alphabet. Everyone loves this company. God, man, this thing prints money like crazy too. Looking at $276 billion in revenue, 94.94 a share in terms of EPS. The 5-year growth estimate for Yahoo Finance was 21%. Same thing. I haircut this a little bit, gave them 15%. Still aggressive, but not a little less than the 21%. Future PE of 20. You're looking at about $2,000 a share for Google, which is decent. I think that's achievable if you actually hit that. Because they're $2,700 a share or something like that right now. So
$27.56.
Yeah, so it's gonna fall. It's gonna fall $700 a share. But this is well within the range of something you could see in a market correction, I think.
And they have a big support at 1960. So yeah, that's pretty close.
Nice. All right, Disney Plus. This was a little bit tougher because COVID really messed up their business, but then they added the whole Disney Plus feature here. But looking for $85 billion in revenue next year, $5 per share, 5-year growth estimate 50% according to Yahoo.
How are they growing? What are they growing with?
Disney Plus.
That's all Disney Plus.
That's a large majority of it. Disney Plus. Wow. I mean, think about it. That I think Disney Plus might actually beat Netflix someday. I don't know. It's tempting. But $5 EPS, 20% growth rate. So I cut that back. I obviously not going to use a 50% growth rate. Future PE of 20, same thing. So we get about $167 a share is what we're looking at with a 30% margin of safety discount, which is not too far below where it currently is trading, about $176 a share. Yeah,
they have a peak at 202.
Yeah. Yeah. I mean, if you believe they can hit those numbers of 20% growth, then yeah, I think Disney's a solid company I'd like to get into. Facebook, I kind of called this one a little while back, and unfortunately, I sold my share a little bit too early, only up about 10%. But you're looking for $138 billion in revenue next year, EPS of $15 a share, 5-year growth rate 23.7%. So I use the EPS of 1009, future growth rate of 21% per year, which I know is aggressive. Future PE of 24, and then we use the minimum rate of return here of 15%, gave us a price of $282 a share with a 30% discount, which is right about where I was looking at Facebook, was right around $300 a share. Unfortunately, they've had a good move up now, so they're like $370 a share, but
yeah, they're on quite the bullish run. You were looking at them, right? Yeah. You were waiting. You were a little bit too greedy. You were waiting for it to drop a little bit.
Yeah, well, no, I did actually bought. I bought one in my Stim account, then I sold it when I started doing the poor man's covered call.
Oh, that sucks. Okay.
Yeah, I know, right? I did make like $30 on it. AMD, Dylan had to get at least one in there, right? So, yeah, they have obviously been stealing market share from Intel like no tomorrow. There's Lisa Su who you have to thank for this. But they're looking for 2022 revenue estimates of $17 billion. 2.71 per share in EPS, and a 5-year growth rate of 32%, which is pretty staggering.
That growth rate's not enough. It's gonna be like 70.
I don't know about that. So here's that 2.71. I haircut the growth rate back to 15%. My future PE of 20, and we're looking at a 30% margin of safety discount. It's about $60 a share.
Honestly, I think that's actually a relatively fair price.
Yeah, I don't think it's unreasonable. Right now, obviously, it's very favored by the market, but yeah, with a decent correction pullback, you could get it out into this range, and I think you'd be okay buying AMD at that point. Nvidia is another one for Dylan.
Oh, you did Nvidia too? Yeah,
I did. Obviously, with the whole autonomous driving and AI, like they're an industry leader in that segment, so I have to give them some credit for that. Dylan completely correctly called that massive run we saw up to and then past the 4-for-1 stock split there. Unfortunately, I don't know how much money you were able to make off that yourself, but you were right.
That was I remember that was my worst trade of 2021 is because I only bought a little bit and then I sold when it made like 25% because I'm like, that's a lot. And it went up like way more. So.
Yeah, it's still rocking. But looking for almost $25 billion in revenue next year, $4 per share in EPS. I had to adjust this back after the 4-for-1 split. 26.84% in terms of 5-year growth estimate, according to Yahoo Finance. So I cut that back as well, almost 15%, give it a future PA of 20 here, giving you about an $80 a share price.
That's low.
NVIDIA
They're at 196.
Is got to be one of the most overpriced companies like in the market right now.
Well, honestly, yeah, they are because people see stock split and they go crazy. Like Apple announced a stock split, they went up. Tesla announced a stock split, they went up 100% off no news other than stock split.
Yeah, I know. People don't understand it, but whatever, to each their own.
That is a haircut, my friend.
Yeah. You know what, though? You never know. I mean, remember the whole story about Amazon going from $100 a share to $6 a share and like the .com crash? So,
I actually agree with you. I think NVIDIA is way overvalued because of this, because of the stock split thing.
Yeah, exactly. Yeah. And speaking of overvalued,
I want to know what this is.
Yeah, Tesla. All right. $65 billion in 2022 revenue, $6.18 billion in, I'm sorry, per share in EPS, not billion. And then their 5-year growth estimate, according to Yahoo Finance, is 44.66%, which is very aggressive. I got to give them, I've been looking at EVs a little bit. I don't own one yet, but Tesla's integration of networks is very Apple-esque, in my opinion, and I think that has a tremendous value. What that value is, that's hard to say, but we're going to try to put a little bit of a number on it.
Before you go to the,
damn it.
But I will say one thing. I think that growth rate is not realistic at all because of the whole thing that came out in the earnings report where the majority of their profit of the last couple of years are selling pollution credits, not cars. And now all these other companies are building cars, so it doesn't work anymore.
Yep. No, I completely know. But regardless, I kind of use the number here. So I haircut the growth rate in half. Pretty conservative. I think 22% there. Give them a future PE of 20. Still aggressive, but nothing egregious. 10% market rate of return. So basically, by discounted cash flow, according to Philtown's calculators, Tesla's currently worth $348 a share. I know it's like $300 a share lower than what it is right now.
Yeah, it's $643.
Yeah, if you looked for his margin of safety price at 50% would be $174 a share. If you're using the 30%, it's $243 a share. Yeah, so yeah, it's going to be a big move down for Tesla before you could potentially justify purchasing it.
And what did I say at the beginning of this? EVs led the charge. They're going to be the worst to fall.
Yeah, will be. Yeah, exactly. I mean, think about this. They're calling for the earnings per share of $45 per share out 10 years from now. And a price of $900 a share 10 years from now. They're like $650 today.
Yeah, that's not going
to. Yeah, I know, right? Bank of America. Oh, this. I have mixed emotions about this stock. I've owned it for a long time in my main portfolio. The poor man's covered calls against it have been a little rough on me, and I know Dylan has had a little hard time with the Bank of America calls as well. But regardless, when we look at the numbers, banks are a little bit tougher to value. Sometimes you tend to use book value more than you use just kind of cash flow. But for this kind of video's purpose, I use this kind of cash flow. So they're calling for $92 billion in revenue for 2022, $3 a share in EPS, and a 24% growth rate for the next 5 years.
It seems insanely high.
Yeah, so I was not going to go with that. So I used the $3 a share EPS. I used a growth rate of 10%, cut that in half, almost a little bit more than fair. Yeah. And I also did not give them a future PE of 20. They're a bank. Banks never traded PEs of 20, I guess maybe in 2007. But historically, 15 is about the S&P 500 average. So we're looking at about a fair value right now of about $46 a share for Bank of America, which, it's trading a little under that, but pretty close to fair value. If we were to see a nice dip down, we get down 30%, $32 is kind of like your buy price on Bank of America by 30% margin of safety, or 23 if you went with a 50%. Yeah.
Actually, so yeah, they're at 37. I'd really like for them to be at 46. That'd really help both of our STEM accounts, even though we're against each other.
Yeah, that sure would. Bank of America's kind of felt like a little bit of like a lead weight since I bought that long call contract.
Yeah, I mean, I have X too, so I'm.
From where I entered X, it's been okay, but the Bank of America's hurting.
Oh boy.
All right.
Well, that is a very important video, everyone. As soon as a crash could happen now, could happen in a year. I actually think it's gonna happen sooner rather than later. We're gonna release a video on that, but this video is gonna be super important. I don't know if you can like favorite it or something, but these are the prices you're gonna look for. Put these on like a whiteboard behind, just wait, because the way that you make a bunch of money is not actually during you make a bunch of money during bull markets, but after, for the people that bought at the bottom of the COVID thing, oh my gosh, they make so much money. So these are prices you want to have.
Exactly. Yeah. That's really where, like, compared to other YouTube channels, I think that's really where you and I are going to like make a big difference. Is that other people are just gonna be like sad and depressed. It's like we're going to be just like going out there and just like trying to dance in the friggin' club.
Oh
and,
yeah, I'm a kid in a candy store at that point. Just give me everything you got.
Yeah, exactly. All right, guys. Well, thanks for tuning in. Let us know down below what you think. Which one of these is the most likely to happen, and which one you really want to get into.
I think Tesla's going lower, but
yeah, I don't know if that low, but we'll see. All right, catch you in the next one.
Have a good one.